How is this card related to your taxes? More on this later. And should you invest in the stock market or in Pokemon cards? Well, according to Card Ladder, Pokemon Index is up 95% as of today in 2025, whereas the S&P 500 is up 15%. But what about the tax implication? So there's a few nuances where it seems like an obvious decision based off of what I shared, but there's more to it. So let's dive into tax implications for investing in Pokemon. My name is Jonny Petrucco, sports card and Pokemon tax guy. So with this topic, really fun. 2025 has been a crazy year for Pokemon, and many have already compared the difference between the stock market and Pokemon investing. One article showed it's a few thousand% increase, whereas the S&P 500 was a few 100%. So this is clear, but what I want to dive into is what are the tax implications? And you could be having less gain for stocks, but pay less taxes than you would for Pokemon. First, starting with the stock trading. Let's say you have a Robinhood account and you bought and sold some stocks for the year. At the end of the year, you will receive a 1099 from the brokerage outlining your short-term and long-term gain. Now, this is the first difference to keep in mind. Pokemon investing, buying and selling, is usually self-reported. With the stock market, right, everything is through a third-party large brokerage, so they're going to automatically send you a 1099. Short-term gains are stocks that you bought and sold within less than 1 year. That will be taxed at your ordinary income rate. So that's going to be up to 37% depending on what tax bracket you are. The benefit comes in when you hold that stock for more than 1 year. This is the preferential tax brackets of 0%. So some of you can pay 0% on long-term gains, 15% or 20%. Now, just a note here, I know taxes, I'm an enrolled agent, but I'm not your advisor. So what I say here is just general information. But let's say you bought in April of 2025. You were smart enough to buy at the dip after the whole tariff crisis. Should you sell? You should consider holding that stock for more than 1 year. As of today, the stock market has gone up almost 40%, right, since that crash. So if you hold it all the way and your income bracket is in the 0%, you will pay 0% long-term gain on that. If you are single filing, you would have to have taxable income of less than $48,000. If married filing jointly, taxable income less than $96,000. Now let's compare this as a investor or collector buying and selling Pokemon cards. Later, we'll talk about if you're a business, what the implications are. But if you are doing this casually and you're a true investor, it's similar. Pokemon cards, I would say, are considered collectibles. Now, technically, the collectibles definition does not include trading cards, sports cards. It includes things like coins, old rugs, and other things that are similar to this. So that means that card is a capital asset, just like the stock is a capital asset. Same things apply, mostly. If it's a short-term gain, then you're taxed same thing at ordinary income. Wherever your tax bracket falls, that profit, so you'll take the sales minus the cost basis, what you paid for it, which is the cost of the card plus the grading fees. That's your cost basis, similar to when you bought Tesla at X amount dollars. Cost basis is the same. Selling price, you have a capital gain. But what about long-term? So this is what's important to know is unfortunately the collectibles long-term capital gains are treated not in the same beneficial way as stocks. So stocks have the 0, 15, and 20%, whereas there is a scary 28% collectibles tax on gains. I dive a little more into this topic in the history right here on this video, but basically if you bought and sold after 1 year Pokemon card, then you will pay up to 28%. That's your maximum capital gain. So it's still preferential if you're a high income earner and you're in the 37%, 32% bracket, then you're capped at 28%. But if you're in the lower, you would basically pay your ordinary income tax rate. You're not going to have the preferential treatment of the 0% for holding it for a long time. So given the simplicity of just, buy a stock, and if you got it at the right time, you hold it, and if you're under that bracket for 0%, that's a great idea to stick to that kind of investing. But I mean, this is also a hobby, so it's fun to buy and sell. This card, I have a number of Charizards like this. I like to collect the first appearance. And let me explain a benefit though of some strategy of what you can use this card for. So as many of you know, in 2021, this card in a PSA 10, the no number, mine just has the number, this was sold for $480,000 because most of the companies labeled it as 1995, mine's 1997. So there was a mistake that this is the first Charizard ever printed. And this is the blue back too, not the green. So wow, some outside investors got in. This is the rookie card Charizard. Auction went up crazy, and the loss was, I think it was almost $300,000. It was like sold a few months later. So let's say you bought a card at the peak and it was a bad investment, bad idea. What can you do with that loss? Well, let's say you did really well with crypto this past year. And again, I'm not your tax advisor, but reach out. I'm happy to help with anyone. So please feel free to schedule a call. But what if you have already got your cost basis here and it's self-reported? This isn't, on 1099. You can now potentially offset some of your other gains, capital gains through stocks, crypto, etc., with that loss. If you bought high on a card, you made a bad mistake, you can cash out, get your cash back, record a loss to offset other capital gains. That's a good benefit there. Now, what if you're investing, buying and selling in the context of your business? Well, there's a number of factors that determine, are you a hobby, collector, investor, or a business? That's the difference between you're on Schedule D, which is a capital gain, your cards are considered capital assets, or you're on Schedule C. That's a business for profit and loss, and your cards are now considered inventory. Take a look at this video to see the difference between those two and where you fall. But most of the time, it will be more beneficial to have that income flow through a business, but not always. So some of the major differences, for one, you have to actually be operating as a business, and you'll hear more about that in that other video. But let's say you do pass those tests and you are able to do so. Keep in mind, although with your business, you now have operating expenses. That's the key difference. You can now expense travel, supplies, and other overhead, whereas you cannot do that on the Schedule D. You also get a qualified business income deduction that's still into play since Trump's initial tax law, and that's a 20% off, pretty much 20% deduction of your business income. So those are two double nice ways to reduce your taxable income. However, there is self-employment tax. So as a business, you are kind of employer-employee, and you don't receive a paycheck that you would from a typical job. On your typical paycheck, you have payroll taxes, FICA 7.65%, but from the employer and employee portion, that's 15.3%. So unfortunately, you got to pay of your profit 15.3% self-employment tax. If you are just, simple collector investor, you do not pay 15.3% on the gain. So if you're truly not a business, don't force it. If you are operating as a business, just go with that. But just so you know, there's a distinction. There's some pluses and minuses on both sides. And so it kind of takes sitting down and looking at your situation. You can even, if you plan to have a big gain in your business, there's something you can do towards the end of the year to try to mitigate that. So a number of strategies, whether you're just a collector investor or on the business side. So hopefully this is fairly introductory, but let me know if I should make a part 2 of this video, or if you have any specific questions, how I can help more directly. But yeah, I'm happy to speak to anyone. Please reach out. And at Sports Card Tax Guy, I'm helping my clients trade their IRS stress for financial success. I'll talk to you soon.